The big four banks are unlikely to pass on the full amount of any rate cut handed down today by the Reserve Bank. The RBA meets this afternoon to make its first official cash rate decision for the year.
Now, Stephen Munchenberg is the Chief Executive Officer of the Australian Bankers Association, and he joins us now from Sydney. Stephen Munchenberg, good morning.
Good morning, Michael.
For argument's sake, if the RBA board does decide to cut rates by 25 basis points, what's the best customers of the banks can expect? 10, 15 basis points?
Well, look, the banks may well pass the full cut on. I mean, we're all speculating about what the banks will do.
But they're giving every indication, Stephen Munchenberg, that they won't.
Well, look, what the banks have been trying to do, and we have been doing this for some months now, is to explain that the Reserve Bank cash rate is not the sum total when it comes to bank funding costs. So those funding costs have been higher now for 6 months, and for the last 6 months the banks have in fact absorbed those higher costs and have not passed them on to customers. Now, we can't do that indefinitely. At some stage, banks will pass on some of those costs to customers. I think that's very likely. And they'll be weighing the reaction that we're going to get from customers. We know it's very unpopular to pass on a full rate cut, with the fact that the reality is that our funding costs are at much higher levels than they have been. They're back at GFC type levels, and we have to deal with that as well.
At the same time, the bank's return on equity in Australia outranks most other banks in other Western economies.
Yeah, look, I've heard that over the last few days, that argument being put. I've looked at the return on equities on Australian banks compared to other banks. The closest comparison to Australia is Canada. Like Australia, both Canada and Australia withstood the GFC well, and the return on equity of the Canadian banks is the same as Australian banks. So where are these countries where ROE is lower for banks? Well, they're countries like France, Spain, Italy, Greece. So the comparison I find a little bizarre that's being made.
Now, according to your own figures from your association, Stephen Munchenberg, banks source only about 20% of their funding from the long-term bond markets. This is the key issue of debate here, those rising funding costs. Most of the funding comes from deposits. I think it's 60% of deposits, which have been rising as Australians, as you well know, have been going into cash because of the volatility on the share market. Again, how could the banks justify crying poor when only 20% of their funds are sourced from these volatile long-term bond markets?
Well, at the moment, those long-term bond markets are effectively closed, so we're not able to raise money in those markets, and shorter-term markets overseas are very, very expensive. So what's happening in Australia is the banks are paying ever greater amounts for deposits, so the cost of deposits have gone up. So while we're under a lot of pressure from politicians to follow the Reserve Bank on the borrowing side, on mortgages and small business lending, I don't see any politicians demanding that we reduce the amount we pay on deposits, and we've actually been increasing what we're paying on deposits. Now, that's great for savers, but it's adding further to our funding costs as well.
Treasurer Wayne Swan, as you undoubtedly well know, has been at the banks now for some time, but especially over the last couple of days. He argued to Barry Cassidy on Insiders on Sunday that banks should not be able to forever maintain their very high levels of profitability. Do you see that as an argument from the Treasurer for the banks to cut their profits?
Well, I actually see that as a disturbing development because, as I said earlier, our profitability is no different from the Canadian bank's profitability, and that's the only system that you can really compare us to at the moment. We don't want to be comparing ourselves to Europe and all the problems that they have because they've got less profitable banks and weaker banks there. So, we do need to maintain a relatively high level of profitability because we need to persuade people internationally that Australia is still a safe place to invest, when international investors are incredibly jittery at the moment because of concerns over Europe.
So you're disturbed by this so-called jaw-burning by the Treasurer, but he, of course, is speaking, representing the views of a lot of Australians who look, for instance, at Westpac's profit of $7 billion. Many people would argue, what's the difference to the bank and its shareholders? And we all concede a lot of us are shareholders either directly or through super funds. What's the difference if Westpac reported, say, a $6 billion or a $5 billion profit? It's still a very, very big figure.
Well, the concern is not so much the headline figure, but the return on equity that you mentioned earlier.
Which is still high, according to those banks. Our return on equity is no different from other banking systems that have withstood the global financial crisis. So, look, I understand where the Treasurer is coming from, and there's no doubt that there are many people in the community, both householders and business borrowers,
who would dearly love to see another business cut, and we understand that. And it's in our interest that the economy is performing strongly as well. But at the same time, if there is a sign that Australian banks are weakening, then that will be disturbing for international investors, and we don't want to create a situation where they lose confidence in the Australian banking system.
OK, Stephen Munchenberg, we'll wait to see what the RBA and the other banks do after 2:30 this afternoon. Thank you very much for your time this morning.
Thank you, Mark.